Ladies and gentlemen, good day and welcome to the Uravi Tea and Wedge Lamps Limited Q3 FY24 earnings conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this call, please signal the operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kaushal Shinde from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to Uravi Tea and Wedge Lamps Limited Q3 FY24 Concall. From management side, we have Mr. Neeraj Gada and Mr. Siddhant Gada. Now I will hand over the call to Mr. Neeraj Gada. Over to you, sir.
Good afternoon, everyone. I warmly welcome each of you to the conference call of Uravi Tea and Wedge Lamps Limited, where we are set to explore our outstanding performance during Q3 financial year 24. Before we dive into the specifics of Q3 and 9M financial year 24, let me provide a brief overview of our company and its business model. Uravi, I'll refer the company as Uravi. Uravi stands as a leader in automotive lamp manufacturing supply sector. We showcasing unparalleled expertise in crafting incandescent and wedge-based lamps, operating under the brand name of UL. We are committed to delivering tailored solutions for both OEMs and aftermarket. Our diverse range of automotive lighting products include stop light, tail light, indicator, wedge-based lamps, reflectors, and some LED headlamps, LED tail lamps. With an extensive distribution network spanning India, we actively pursue global expansion opportunities through strategic partnership with our LED lamp filament manufacturers in China and Philippines. These collaborators underscore our commitment to delivering cutting-edge solutions to our customers. As a notable achievement for us, being recognized as one of the largest manufacturers of automotive lamps for instrument cluster, that is speedometers, and we proudly hold the second largest position in automotive signaling and parking segments for OEM. May not be in Asia, may not be in India, but maybe in Asia as well. In financial year 23, the company reported total revenue of 34.62 crores with an EBITDA of 5.52 and profit after tax is 0.87 crores. Given the thriving Indian automotive component industry poised to become the world's third largest by 2025, our outlook is very optimistic, with the component sales to domestic OEMs surging by around 46% and to reach 27.27 billion. We anticipate the industry revenue to hit a remarkable about $200 billion by 2026, providing Uravi with abundant opportunity for growth in all the segments. Navigating this dynamic landscape, our strategic positioning emphasis on innovation and comprehensive product portfolio ensures that we are well prepared to capitalize on high development prospects in all vehicle industry segments. This commitment positions us to thrive in the evolving automotive landscape, ensuring sustainable growth and success for our company. Regarding the financial highlights of Q3 financial year 24 and 9M of FY24, it is evident that Uravi has demonstrated remarkable resilience and strategic progress. In Q3 FY24, the company's total revenue witnessed a substantial upswing, reaching 11.53 crores, demonstrating its adaptability in ever-changing business environment. Despite a a slight dip in EBITDA to rupees 1.61 crore. The EBITDA margin at 13.94% and profit after tax to 0.38 crore with a PAT margin of 3.32%. Looking ahead to second half of financial year 24, Uravi's optimistic outlook is grounded in its strong Q3 performance and strategic initiative geared towards industry dominance. The company's consistent growth and financial stability position it favorably for continued success in dynamic market landscape. Turning our attention to 9M FY24, Uravi's impressive total revenue of 30.91 crore, up from 26.55 crores in 9M FY23, underscores sustainable growth. The increased EBITDA of 5.18 crore coupled with an EBITDA margin of 16.52% reflects sound financial management. The profit after tax for 9 months financial year 24 is at 1.58 crore with a PAT margin of 5.04%, signifies profitability. The earning per share is risen from 1.11 rupees in 9 months financial year 23 to 1.44 rupees in the 9 months of financial year 24. It is noteworthy that the company has not only exceeded its profit after tax from 0.87 crore to 1.58 crore in the first 9 months of financial year 24, but has also showcased remarkable growth. In essence, Uravi's outstanding financial achievements during this period, coupled with its strategic endeavors, underscores its unwavering commitment to the excellence. As relied upon supply to Tier 1 partners of all major OEMs, Uravi remains the preferred choice, emphasizing its dedication to providing top quality products in the market. Before we move on to the question and answer session, I want to express my sincere gratitude to all our stakeholders for being an integral part of our growth journey. Your support and involvement has played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open floor for question and answers. Thank you once again for your presence and continued support. Over to you, please.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Khushbu Kaur, an individual investor. Please go ahead.
Hello. Hello.
Audible, ma'am. Please go ahead.
Yes. Could you just tell us what is the gestation period for the product development to actually sell up the new product?
Sorry, ma'am, I am not able to hear your question very clearly. Can you please repeat your question? Thank you.
Sorry to interrupt. Khushbu, you have some background disturbance.
Hello.
Yes, please go ahead.
Yes.
What is the gestation period for the product development to actual sale of the new product?
Like, to be specific, like gestation period for?
For the new product.
Like what new product? Hello?
Hello. Yes,
I'm
sir.
not able to understand your question, ma'am. You are referring to some new product. So the new product are in terms of lamp or automotive, other.
Bulbs, sir. Bulbs.
Bulbs, see, these lamps are coming under safety protocols. So we are not allowed to design a specific lamp because all lamps are approved by ARAI, and the same lamp has to be fitted in all automotives. So designing aspect is not included in automotive lighting industry. Only the flexibility is given to OEM vehicle manufacturer who can design their lights, but the lamp used and current and light output is always fixed. So there is no new product which we need to develop now.
Okay. And sir, what is our sales from OEMs?
What is our?
Sales from OEMs.
So whatever figure is, I think 2.5% is only sales from aftermarket. Rest all sale is OEM.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Yashwanti from Cogent Finvest. Please go ahead.
Thanks for the opportunity. Continuing with the earlier question, I just had a question. Like whenever there is a change in the model for any automobile you supply, the tier 1 supply of any automobile, so is there any likely changes we need to make? So do we have any something called the life cycle of the product?
Thank you for your question. Now, whenever a new model is to be launched, the OEM starts the project maybe somewhere around 6 months before or 1 year before, but once the design is final at OEM level, once design is final, then OEM will give it to tier 1, and as I said, lighting part never changes. Only there may be change in the lighting module, like design of it, but inside lamp bulb remains the same.
Okay.
So there is no, and the bulbs has a life cycle depending upon the lumen and wattages prescribed as per the EC regulations, which starts from speedometer is somewhere around 1000 hours to tail lamp somewhere around 500 hours to 100 hours.
Okay. Okay. So, currently, who would be our key competitor in the industry?
Before this LED replacement came, we had Philips and Osram as our competitors. But since whatever incandescent lamp which are being used, see, Uravi is mainly focused on two-wheeler industries. All our customers are major two-wheelers, where incandescent lamps are much proven and they will be there till maybe 2030 or 2032. So Philips and Osram were not able to compete on this low-value products because of two-wheeler industry. So they were the only competitors before. Now I think there is only one major manufacturer in northern part of India, and other part is Uravi.
Okay. So is it possible for you to name the competitor which is existing in the northern part of India?
Specific name we cannot share, but there is only one is there.
Okay. So the following question is, so in this scenario, what is our...
The line for you is not very clear. Please use the handset mode, ma'am.
It's on handset only. Am I clear now?
It's still sounding muffled, ma'am.
Is it clear now?
It's slightly better. Please go ahead.
Yeah. So, in that case, what is our market share in the industry? This is the one question. And the second, have we started approaching into the two-wheeler EV manufacturers?
I answer your first question. Currently, Uravi's market share in the total two-wheeler OEM industry is somewhere around 50%, you can say. For speedometer cluster, our market share should be somewhere around 85%. And indicator lamps and stop lamps, we can consider our market share somewhere around 50% to 55% of the total market. Your second question was related to EV. Can you just let me know again?
EV two-wheeler manufacturer.
So we will not be manufacturing EV two-wheelers, but Uravi is certainly developing some product for EV two-wheelers, which are under development stage with OEM, because we will not be able to tell which OEM and which vehicle, because it's still under the development stage, and that vehicle is going to be launched in later part of this year or maybe next year early.
Okay.
So Uravi is going to manufacture some kind of EV component, which would be accepted by each and every EV manufacturers in India.
Okay, that is really great, sir, to know that you are entering into the EV segment also.
Yeah, it's going to come, and I think we will be able to announce the same shortly in coming future.
If I may ask you one more question, what is our current capacity and the capacity utilization?
If you go through this investor presentation, which is already shared, as an average, Uravi has 3 plants. One is on Bombay-Nasik Road, near on Kalyan Highway, and 2 plants are there in Jammu. Average capacity utilization at present is somewhere around 58 to 60% you can consider, after this additional orders what we have received from September.
Okay. Okay. So are we receiving any benefit for having a presence in Jammu Kashmir area?
Initially, I think 2 years back, before GST came, 4 years back, we had an excise benefit there. Now we have a local benefit, but Jammu has a low energy cost compared to Mumbai and other part of India. So energy cost is a biggest advantage there.
Okay. Okay. And so your guidance on the margin profiling going ahead?
Sorry?
Your guidance on the margin profiling going ahead?
Yes. See, now this quarter we did we were able to increase our top line, but simultaneously being a festival month like Diwali and all, there were some obligations which had to be met on company's part. And since our order book was increased suddenly after September 19 September 2023, we had to import a lot of things by air, and simultaneously we have to deliver by air to our customers. This was very much unexpected. So that has hit our bottom line. Yeah, the profit. So I think next quarter I am expecting I am very much optimistic about this PAT and EBITDA margin.
Okay.
It's going to be much higher than what is now.
Okay. So what range we can expect, and will you be able to maintain even going forward for the FY25?
So what I can see is, since we had a very small time to ramp up the production and stabilize raw material, which we did from September till January 31st. Now I think all our supply chain is quite stabilized. So I am expecting a very good growth. You can expect around maybe
I couldn't hear you.
Sorry, are you able to hear me? Hello?
Excuse me, sir. The line for the participant seems to have dropped from the queue.
No problem.
We will proceed with the next question. The next question is from the line of Ananya Swaminathan from T Square. Ananya, before you ask your question, let me remind participants that they may press star and 1 if they wish to ask a question. Please go ahead, Ananya.
Yeah, thanks for the opportunity. So what is market outlook for our products?
Market outlook for our products. So market outlook, like in India, approximately 1.5 to 2 million two-wheelers are being made every month. Out of which currently maybe about 100,000 are EV and rest 1.9 million are normal. Getting an average of maybe about 1.5 million, you can say, per month is a fixed average, and each vehicle is approximately fitted with about 12 lamps. So you can, and Uravi is having about 50% market share for this. So was that your question, or it was in some different form?
No. This is what exactly I asked for. That's great. And are there any long-term contracts or agreements with key customers?
Yes, because since we are an approved OEM supplier and all the lamps which are being used by OEMs are approved with ARAI, so OEMs are also tied up with Urvi lamps. So they have to use Urvi lamps because in the drawing and all, it is all. So you will find specific model will be used by Urvi lamps only. So OEM will use Urvi lamps only for specific model. So these are always a long term. Even the new model will come, they will mention Urvi name in their drawing, and it would be used as long as that model is running. So that way you can say it's a long-term tie-up only.
Great. And any growth and expansion strategy you can share?
We are going forward with some EV chargers and products like which we are going to launch soon in near future. That could be for some specific OEM. We are already developing it. So that would be our expansion. And in automotive lamps, as you can see, our top line is already increasing, and I am expecting for next quarter also we are going to increase this top line furthermore. And naturally, the profitability will also increase in that synchronize.
Okay. And do you plan any international expansion?
Currently, we are already having a tie-up with companies in China and Philippines for LEDs, and we may see some development there for LED manufacturing unit with technical collaboration somewhere near in Vietnam. But it is still not sure, but we are exploring that possibility as well.
Okay, great, sir. Thank you so much.
Okay.
Thank you. The next question is from the line of Ritika G, an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, can you brief us about your product portfolio or any plan to expand or diversify the same?
Product portfolio for automotive lamps, we do manufacture speedometer lamps. We do indicator lamps, signaling lamps, and tail light. So all kind of for two-wheelers and three-wheelers. Simultaneously, Urvi is manufacturing LED filament lamps which are being used in home. Urvi is also manufacturing LED speedometer lamps and LED indicator lamps as well for aftermarket purpose, not for OEM purpose. These are our automotive lamp portfolios.
Okay, sir. Okay. And sir, what is our current capacity and capacity post expansion? What is the current capacity utilization?
So as I said earlier, if you take an average of all our 3 units, we do have a capacity utilization of somewhere around 58 to 60%.
Okay.
And we have already done the expansion, and we are expecting some more orders. And once that is being done, then we will be utilizing about 75% of our capacity.
Okay, sir. Okay. Okay. And what are the steps management is planning to take to improve profitability margin?
So first thing is we increased our sales, which you can see the top line is increased. Secondly, we are trying to increase this top line furthermore in coming 2 quarters, which I think we will be doing so. We have done expansion. We have already streamlined our supply chain, which was due to this sudden increase in order. We had a lot of cost escalation in terms of transportation and all, which now is under control. So I am expecting a very good profit for next quarter, and which will be increasing because the product is being stabilized. That customers are now regularizing those products very much. So I am very much optimistic for March 24 and coming 2 quarters as well.
Okay, sir. Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Vaibhav Shah from Cogent Finvest. Please go ahead.
Yeah, thanks for the opportunity. And sir, I have 4-5 questions related to our expansion and business vertical. So first of all, just want to understand, know, in last call you had talked about our EV charging for expansion plan. So
Correct.
currently, what is the status of the product development, and by when we can see the commercial production for that, and what will be the capex needed in terms of our manufacturing facility, and in general, what will be the manufacturing plan? So are we doing to manufacturing on our own, or we are going to outsource it, or how is it?
Thank you for the question. As I had informed already that EV charging prototype is already being developed and it is under the final stage. We are expecting the same to be tested in next quarter by OEMs, and once it is approved, the commercial production, what we are thinking is going to come on the second quarter of 24. That will be somewhere around July, August 24. The commercial production will start. Uravi is currently have already invested in some areas in as a technical collaborator for EV, and we will be manufacturing it with that collaborator in India only. The details which will be shared at the due course of time.
Okay. So, is this going to be a greenfield project or already with? Don't give the name or exact thing, but just wanted to understand. It is going to be a greenfield project or some collaboration in terms of like they are having the manufacturing capabilities, and we are going to develop along with them.
It would be a sort of mixed bag. Many things have been included or introduced by Uravi. The company which is going to manufacture will be a part and parcel of Uravi only. And we will be jointly manufacturing the same, and because we need to have many things as per OEM standard which has been introduced by Uravi, and accordingly it would be going to be manufactured jointly. So it would be a mixed bag. It would be a new company as well, a new manufacturing facility, but simultaneously would be technically collaborated by Uravi in some terms.
Okay. And what kind of capex are we envisaging for this?
The capex is, as I told you, a lot of things have been already introduced by Uravi to that company. That company is already capex, and Uravi will be simultaneously joining. So we are looking somewhere around the testing facilities and some manufacturing facilities. The capex would be somewhere around 2 to 5 crore rupees.
2 to 5 crore rupees. And what, if you can provide, what will be the number of units in terms of chargers and everything we can produce from there, from this capex?
The current market size is somewhere around 100,000 units are being made per month. That is the market requirement.
Okay.
Out of which organized, unorganized, you may say, unorganized segment is somewhere around 50% and organized sector is somewhere around 50%. So it would be around 1.2 million market per year. So first year, Uravi is trying to produce and sell somewhere around 5,000 pieces per month. So only 60,000 pieces. That's what is our first year target. And we do have a capacity to produce somewhere around 40,000 units per month there.
Okay. So, yearly, we can say we can produce somewhere around 5 lakhs units, once the production and everything is stabilized.
No, not 5 lakhs. 5,000 units per month, that would be around 60,000 units for first
Correct.
year.
Correct.
And then we will be able to produce about 250,000 units year. And at the same time, we will be doing more capex and increasing the capacity to 500,000 units in that year only.
Got it. And, sir, in terms of this chargers, are we only going to be a manufacturer? Let's say that these chargers will be the set which will be going out with the manufacturer's kit. Like it will be a part of the two-wheeler which will be sold along with the charger, which will be sold along with the two-wheeler.
Yes.
Is the understanding is correct?
Yes. It is called as an off-board charger. It will come along with your two-wheeler.
Okay. So we are not going to have some kind of the DC chargers or fast charger network, which lot of player and oil manufacturing companies or processing companies are also planning. So we are not into that.
We will be doing fast chargers as well, but these are the mobile chargers. You can take these chargers along with you while you are driving your two-wheeler, and you can charge it anywhere you want. These are off-board chargers.
Got it. And sir, just coming back to your current business, so earlier to my colleague, you said somewhere around.
What's that?
Vaibhav, you're not audible at the moment.
Hello.
Yes.
Can you hear me now?
Yes. So request you to please repeat the question.
Yeah. So earlier, in a reply to my colleague, you said around 95% plus the revenue is coming from the OEM. So, in terms of product mix, what will be the largest product? Headlamps or speedometer lamps, or what will be the largest segment for you?
See now, in a one two-wheeler, there are 6 speedometer lamps and 4 indicator lamps. And there is one lamp which is similar to speedometer, which is fitted above your number plate. So you can say around 6 lamps in speedometer and 2 other lamps are the same speedometer type of lamps are used in one vehicle, and 4 lamps are used in as an indicator. So the quantity-wise, speedometer lamps are more compared to indicator lamps, but the value-wise, indicator lamps are more than speedometer lamps. So in one vehicle, if you consider, say we are giving a speedometer lamps maybe 8 and 4 the indicator lamps, the value-wise indicator lamps are much higher than the speedometer lamps.
Got it. And when we see in terms of your manufacturing, so manufacturing process for both will be the similar, kind of a similar.
No, some process will, because speedometer lamps doesn't have a metal cap. They come with a chip kind of thing which you have to insert in the holder, and then the current is provided to the lamp to glow. While indicator lamps are fitted into the module where we have to give them a metal cap. Same like in your housing lamp when you have a cap. It's something like so the process for manufacturing is different for both of them.
Got it. And in terms of capacity, what will be the capacity for both? I'm just want to understand can we manufacturing both of them on the same line, or a different production line is required?
Different production line. For both,
Okay.
the process is different, the production lines are different.
Okay. So simultaneously both can be manufactured?
No. The speedometer lamps cannot be produced on indicator lamps, and indicator lamps cannot be produced kilometer lamps.
Got it. That I got it. So, but we can produce both the things at the same time. One line on yeah.
Yes.
Okay.
Since both are independent functioning line, we can produce both separately and independently.
Okay. So, in terms of the number of, not give the names or OEM, but in terms of models, in how many two-wheelers are these lamps are used? If you can give a ballpark
Will give
number.
you, except Honda, all other OEMs are using Uravi lamps. Honda is not using at present because Honda has a single source supplier policy, which they are changing. So we are expecting to get Honda orders by next year because OEM process of approval is somewhere around 6 months to 12 months. We have already initiated the process. So by next year, we are expecting to get approval from Honda as well. Other than Honda, all OEMs are using our lamps.
So most of all two-wheelers will be having some of our lamps.
Yes,
my understanding
of course.
correct?
Yes, except Honda.
Okay. Be it a bike or a scooter.
Yes, of course.
Okay, sir. Thank you so much, sir.
Thank you very much.
Thank you. The next question is from the line of Shweta Rathod, an individual investor. Please go ahead.
Hello.
Yes, you are audible, ma'am.
Yes.
Good evening, sir.
Your voice is not very clear, ma'am.
Good evening, sir. Thank you
Good
for
evening.
the opportunity. Yes, sir. My question is... Hello? Now it's audible?
Yes, it's audible.
How is our dealer distribution system, sir?
I think Mr. Siddhant Gada is line. He is taking care of this. Siddhant, can you answer this question? Dealer distribution network.
Yes. So I think before the start of this year, we were majorly present in the northern market and specifically in the UP market. But what we have done this year is we have expanded our dealers network and we have targeted the eastern market. So we are present in West Bengal, we are there in Jharkhand, we have strengthened our network in the south as well. We have increased the number of distributors in Karnataka. We have started supplying in Kerala. We have appointed a distributor in Tamil Nadu.
Sir, sorry to interrupt, Siddhant, sir. There is a little disturbance on your line, sir.
Yes.
Am I audible now?
Very clear.
It's still
It's not clear.
Hello? Yeah. Is it audible now?
No, sir, it's not clear right now, sir. We're still having that disturbance on the line. May I just reconnect you quickly, sir?
Yeah. I'll do that.
All right. Ladies and gentlemen, please stay with us. I'll just reconnect Siddhant, sir. Ladies and gentlemen, we have reconnected with Mr. Siddhant Kada. Siddhant, sir, you may proceed, sir.
Yeah, so as I was saying, before the start of this year, we were majorly present in Mumbai and in the northern part of India. What we have done this year is that we have expanded our network. We have introduced our bulbs towards the eastern part of India. We are present in Jharkhand. We are present in Bengal, West Bengal. We have appointed a few dealers and distributors in Orissa. We have appointed a few more distributors in Karnataka, Tamil Nadu, Kerala, and we have covered a lot of parts of Maharashtra as well. So you can just somewhere around 40 to 50 distributors and dealers we have appointed this year. Hello?
Sir, this participant seems to have dropped from the queue. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. We have the next question from the line of Vaibhav Shah from Cogent Invest. Please go ahead.
Yeah, hi. Thanks for the opportunity again. Just wanted to understand, sir, there was a slight dip in the EBITDA margin at quarter level, and also that continued in the PAT margin also. So what was the primary reason for that, and what is the sustainable margin that we can maintain at EBITDA level?
Thank you for the question. I will answer this question. See, there was a typical thing happened with Uravi on 19th of September, where a couple of OEMs suddenly increased our schedule from 20% to 80%. Our SOB has increased. So, and when these things happened, we had to use resources and import material by air and then deliver the same by air also. So whatever, even after increasing our top line, there was a slight depressed EBITDA because of the same reason. Because if you can see the percentage wise, the cost of material consumed, you can see there's a difference of around 20-30 lakh rupees.
Correct.
Percentage wise. So this was all affected because of our increase in cost of stabilizing our supply chain. There are a couple of new products which we had to develop at a very high cost and which were not giving us a profit. But since we had 80% of market share, SOB from that OEMs, we had to absorb that high cost as well in our profit. So all these things need little bit time to stabilize. So I am expecting a very good March 24. The exact presumption I cannot say right now, but it would be much bigger than what you are seeing in this quarter.
So on the normalized level, can we maintain EBITDA of, let's say, 18-20%?
I am expecting a little bit conservative, somewhere around 17 to 18%.
Fair enough.
For March. Later on, it would improve, and we will try to reach up to 20%, which would be very easy at that time.
Okay. Just to continue on the previous question from another participant, we were discussing about the dealer distribution network. So, sir, can you please repeat that, because the line got disconnected for this. So can you just elaborate more on what's your dealer network in terms of current presence and what we are planning?
Yeah, I think Siddhant will take on.
Sure.
Siddhant? Hello?
Siddhant, sir, so the line for Siddhant sir just disconnected. I'll just reconnect with him.
Yeah, please.
Sir, in the meantime, can I ask you another question?
Yes, please let me know.
Sir, when your charging, EV charging setup is stabilized and everything, so what kind of revenue growth we are expecting, let's say, for FY25? So for FY25, I think you will be having this charging setup for around 6 to 8 months, depending upon when you start the production. So from FY25-26, what kind of revenue growth we can envisage? Don't give the exact number.
I can just tell you. You can do the calculation. The one EV charger is somewhere sold from rupees 15,000 to 19,000. That would be the individual cost for the EV charger. We are targeting to make somewhere around 5,000 pieces per month.
Okay.
For the coming financial year.
Yeah.
From April
that numbers your production plan that you explained in my previous question. So 15,000 to 19,000, it's unit cost.
Yeah, that would be the selling cost. Yes.
Okay. So, and what kind of EBITDA margin will be having in that? If you can provide some.
That would be difficult, but I can tell you that it has got a a comfortable EBITDA margin.
So better than the current product mix?
Yes.
Oh, okay. Thank you.
Thank you.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Mr. Kaushal Shinde for closing comments. Over to you, sir.
Thank you very much, everyone, for joining the conference call of Uravi Tea and Wedge Lamps Limited. If you have any queries, you can write to us at info@Kirin Advisors. Once more, thank you everyone for joining the conference.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.